Most Boston landlords are losing money every single year, and they don't even realize it. If you own rental property, you could be leaving thousands of dollars on the table because of avoidable tax mistakes. Today, I'm going to walk you through the key errors that we see at Green Ocean Property Management and exactly how to keep more of your hard-earned income legally and confidently. Now, why does this matter for you? Whether you're managing a single condo or a whole portfolio, understanding these tax details is the difference between building wealth and just collecting rent checks. I see these mistakes every single tax season, and the costs add up fast, especially here in Massachusetts or Taxachusetts. I'm Jarrett Lau, founder of Green Ocean Property Management, and for over a decade, my team has been partnering with Boston area landlords to help them protect their investments, reduce stress, and maximize results. Our mission is really simple. Educate the landlords so that they can make smart decisions, avoid expensive pitfalls, and ultimately keep more of what they earn. So let's dive right in. Here's what you're going to get out of this video. The most common tax mistakes that landlords make, simple ways to avoid these mistakes step by step, and a walkthrough using real numbers, not inflated claims, as well as the biggest mistakes and the mental roadblocks holding back owners. And at the end, a practical checklist that you can use on your own property. So let's get started. The number one mistake that we see is overlooking deductions for repairs versus improvements. One of the biggest issues, confusing repairs with improvements. So, for example, fixing a broken sink is a repair, and that's usually deductible in year one. Renovating a kitchen is an improvement. That gets depreciated over time. Mix these two things up and you can pay more in taxes than you need to. Two, not taking full depreciation. A lot of landlords don't take advantage of depreciation. If you own rental property, you're allowed to depreciate the value of the building, not the land, over a set period. Many owners miss this, and that can mean losing out on thousands in legal deductions year after year. Always clarify with your tax professional how much of your property is depreciable and what that schedule looks like. Three, forgetting about everyday expenses. Did you drive to the property? Did you use a dedicated space at your home to manage your rentals? Did you pay a professional like Green Ocean Property Management to be able to help oversee your investment? All of these things can be legitimate deductions, but only if you track them and ask for them. Four, mixing rental income with personal or job income. It's a common misperception that rental income gets treated the same as your salary. In reality, rental income is a unique category with unique rules that can either help or hurt your bottom line depending upon how it's managed. So, how do you actually avoid these mistakes? Here's the clear, simple process that you can follow starting today. Step one, track every expense every month. Keep a running record. It doesn't matter if it's a spreadsheet or a notebook or an app. What matters is consistency. Don't rely on your memory at tax time. Step two, separate repairs from improvements. Repairs can usually be deducted now. Improvements are usually depreciated over several years. When in doubt, ask your CPA or tax professional and keep documentation for each expense. Step three, don't skip depreciation. Ask your CPA, am I depreciating the full allowable amount of my building? Don't assume it's automatic, double check the numbers. Step four, capture every single small deduction, your mileage, your home office, your management fees, legal, and accounting costs. All of it can add up. Even really small expenses can make a big difference. So let's use an example using simple round numbers, no pie in the sky promises, just a practical demonstration. Imagine for a minute that you own a multifamily property here in the Boston area. You pay $6,000 a year for repairs, $7,200 for property management fees, you drive 500 miles a year for property related trips, and your accountant confirms your property's building is 400, which is depreciable as time adds up. And you can even be looking at over $18,000 in legitimate deductions, not including mortgage interest or other big ticket items. Every owner's numbers are different, but the process of finding these savings is always the same. Always check with a qualified tax professional for your specific situation. Now, I hear all these myths, and I want to spend a few minutes to address them directly because they cost landlords more than anything else. My accountant will handle everything. No, not unless you give them complete, organized records as well as direction, right? You can trust but verify. Your CPA, you can't deduct what you don't track. It's not worth the effort for a small portfolio. Actually, the fewer properties you own, the more important every single dollar is. I'll remember every single thing at tax time. Nobody does. So you just gotta write it down or lose out. Here's how to make this stick starting right now. Review your last year's tax returns for missed deduction. Create an expense tracking system that you'll actually use, or talk to your CPA about the repairs, improvements, and the depreciation. Start logging your miles, the use of your home office days, and every professional fee that is associated with your property. And just repeat this process every single year. It only gets easier. And if you want more straightforward, no-nonsense property management tips for Boston landlords, hit the subscribe button and we're here to help make your real estate journey easier, one smart decision at a time. Smart landlords don't just collect rent, they protect their wealth, avoiding mistakes and use every single legal advantage available. At Green Ocean Property Management, our mission is to be able to help you succeed through education, clarity, and partnership. And if this video helped you, let us know in the comments and share it with another landlord. And remember, every single dollar you keep is another building block for your future. I'm Jarrett Lau. Thanks for watching Green Ocean Property Management, and I'll see you in the next video.